What's up, everyone? It's George from CryptoPotato, and today we're here with Daniel Joe. If his name sounds familiar, it's because he's responsible for the awesome Bitcoin analysis here at CryptoPotato. Daniel is an on-chain technical analyst at Lightning Capital and at the data intelligence firm CryptoQuant. He has more than 10 years of experience investing in equities with over 4 years in crypto markets, with a deep background on finance and economics. Today, we talk about the current market situation from an on-chain perspective and what can we expect going forward. Are we still in a bull market? Will we see Bitcoin price hit 100K this year? Well, stay tuned to find out. Also, don't forget to smash the like button if you enjoyed the video, subscribe to our channel, and click that notification bell so you don't miss on any new videos in the future. So hello, Daniel. It's very nice to have you here, man. This podcast is way overdue, especially with the madness in the markets and all that. How are you doing?
I'm pretty good, man. How are you?
We're doing good as well. Thank you. So can we start this with you giving us telling us a few words about your background? What were you doing before that, and how did you get into crypto?
Yeah, so I have about 10 years in the markets. Started out with equities. I worked at small tech startups to mid-size big corporations. My background's in finance, economics, and some marketing. So I've always had this fascination of how money works and the importance of investing. To kind of give you just an idea, I kind of started out as like a value investor, very traditional, build your financial models, look at P ratios, very safe and boring. And then I kind of caught the tech growth wave, by investing in Apple and Tesla, Nvidia, AMD. And I heard about, Bitcoin in 2014, but I just brushed it off. I was like, it's a scam. It's going away. Whatever. Who cares?
Yeah.
But, after a couple of years, got my attention again. And in the middle of 2017, that's when I started to get more interest into it. And that's when I got in. Because I just read the white paper, I just read more about it, and then one day it clicked. Wow, this could be the future. And then I took it more seriously, and then the more I learned about it, the more I put money into it, and now it's one of my my biggest investments. So that's kind of just a quick story about kind of my background.
Yeah, it's very funny because like a lot of the people that I talk to, they all have this realization about Bitcoin. So they first hear about it, but then they discard it, and after that, years later or months later, they go like, "Aha, that could be the thing." It's pretty much what happened to me as well. Like I remember back in 2010 or maybe 2011, I don't know. Me and one friend of mine, we were playing a lot of online poker. So we're constantly online on 4chan and all these different poker forums. And one day this guy comes to me and says like, dude, we should buy Bitcoin. And I'm like, what the hell is Bitcoin? And he's like, it's this digital currency. We should just put $100 in it and just let it there, let it rip, see what happens. I'm like, yeah, sure, we can do that. And then we actually tried buying Bitcoin all the way back when it was, I don't even remember the price. I don't think it had any measurable price or something. It was cents on the dollar. And we wanted to put like $100 in it, but we actually couldn't. We couldn't because back then, in order to buy Bitcoin, you had to find someone who's willing to sell it. And the way it worked was you would send some guy the money over whatever it was, say PayPal or whatever it is, and then he would send you the Bitcoin. So that's what didn't click for me, and that's why I completely discarded it and never got back to it until much later. Of course, do I regret it? No, I don't really regret it, because I don't think I would have held up until now, because back then I didn't really realize anything about Bitcoin. So imagine putting $100 into something, and like 1 year later that's worth $50,000, for example. Of course I'm going to sell it, especially if I don't understand it. So yeah, it's really funny. But so for those of you who don't know, our listeners, Daniel is also a contributor at Crypto Potato, and he's the guy behind those awesome Bitcoin on-chain in-depth price analysis. So everything you see there is 100% him. We're really, really happy to have him on board. But Daniel, people might not know that you actually sold some of your Apple stock to buy Bitcoin. Can you tell us what's the reasoning behind that, especially from a guy who's coming from traditional finance? As you said, you are a value investor. So what's your thought process there?
Yeah, so I've held on to Apple for many years, got in 10 years ago. So it's been a very long ride, a lot of cycles up and down. But the reason why I sold Apple was because for the longest time, I was waiting for the market to value Apple as a service company, because that would give it a P multiple of roughly 30 to 40 times earnings, like Google or Facebook. So this year and last year, that's when it finally happened. And because for many years, Apple was trading as a hardware company, so very, very low P multiple. But what I saw was this booming service business with very high margins and very high recurring revenue. So, finally the market realized that, and it caught up in valuation. And, I've held on for a very long time. So there's a lot of gains. And I was like, well, this is a great time because Apple is at multi-year highs, or very high and very rich in valuation, in my opinion. And Bitcoin was at 30,000. This is during the May-June crash. So, and I was, very patient with Apple. I didn't really sell anything until like last year, this year. So, I took profit, and I was like, I'm rotating this into Bitcoin because Apple, in my opinion, is near full valuation, and Bitcoin, according to onchain and fundamentals, is very undervalued. So that's why I sold Apple, paid the taxes, rotated what I had left into Bitcoin between $30,000 and $34,000. And since then, it's been doing very well. And I think this will be the biggest rotational trade that I've done, because how often can you get an opportunity to sell an asset near full valuation and to buy an asset, with data behind it that shows you it's undervalued? So I actually did that twice. After I sold Apple, right, it ripped up a little higher, but Bitcoin, hit around 52K recently.
Right. Yeah.
And then dipped to 40K. So the same, but this time Apple was a little bit higher in the 150s. So I sold at 157 because there was a technical target that hit on my system. Took profit again, and I bought Bitcoin between $40,000 and $45,000 recently for the same reasons. So, and those are my two biggest dollar purchases of Bitcoin ever. So I've been buying for 4 years now, and just accumulating. But the recent purchases are my biggest in dollar amounts, and that's because my conviction in Bitcoin is stronger than ever.
Right. So you mentioned on-chain and technicals. One of the things that you do, and that's what I really love about your analysis, is that you rely on strong on-chain fundamental data, whereas a lot of other traders are using solid technicals, but you kind of back your technicals with solid on-chain fundamentals. Can you talk a little bit about that? Where we're at right now? What's going on in terms of on-chain data?
Yeah, so the on-chain data overall is very bullish. I think the trend is firmly bullish for many, many reasons. And there's a lot of metrics that can highlight, why Bitcoin is most likely still in a bull market, not a bear market. It's most likely, I would say, like a mid-cycle pullback. But the main takeaways from on-chain is just showing the behavior of long-term holders, miners, and what's happening with the weaker hands. So it's really important to note that the open interest, all the leverage on derivatives have caused a lot of huge flush outs and forced selling. And that caused that big drawdown back in May, and also the recent pullback from 53K, 52K down to 40K. It was a lot of just FUD and liquidations, because when you look on chain, most of the selling came from that. And then that led to the retail and the weaker hands, panic selling. So because this whole time, the supply held by long-term holders kept going up. And there's a great metric by CryptoQuant. It's called the mean coinage. It just measures if long-term holders are distributing or be accumulating. So since May till now, just over 4 months, that metric has been going up the whole time. So it indicates that they're accumulating. And to kind of keep it short, so I looked at the data from the previous bull and bear markets. So during the rapid price appreciation for bull markets, these entities, the older hands, strong hands, they distribute and they take profit on the way up. After the peak, when there's a big drawdown and the bull trap, that's where they aggressively sell and take profit again. So if this was a bear market, we would have seen that aggressive distribution and selling back in May, June. Didn't happen. Pure accumulation the whole time. And it still is right now, even with this drawdown. So that tells me that this is just a mid-cycle pullback. We're not in a bear market, and that we are firmly in a bull market. So as long as these trends continue, we should expect significant gains in Q4 this year.
You mentioned a bull trap. Can you explain this in simpler terms so our audience can know what exactly a bull trap is? Because we talk a lot about it, and not just bull trap, but the bear trap as well. So what's the concept between, in terms of technicals, between some kind of price action being a trap for either bulls or bears?
Yeah, so typically you'll see bull traps after a very significant price appreciation. So in Bitcoin's case, after the 13 and 17 cycle, you get these parabolic moves up. Everyone's euphoric. Sentiment is fully bullish. Everyone thinks that it's going to keep going higher, right? And then obviously at that point, the market runs out of buyers. So the market comes down, people take profit, and then it comes back up. So during this rally, right, there's like that hopeful phase where it's like, oh, like we just had a correction, it's okay. We're going to come back up and retest all-time highs and push higher. But really, while that's happening, all the strong hands, the older hands, long-term holders, they're just distributing and selling to all the retail that's FOMOing back in, and then there's not enough demand left in the market and too much supply, so it just pressures the price. It comes down, and then that's a trap. So all those retail that bought at that rally, they get trapped, and then they're holding the bag now. And then for bear traps, it's pretty much the opposite. So like, for example, this year, I think that 64K to 30K is a huge bear trap. You got the big wipeout from liquidations, but all these bears, started piling in shorts at the bottom, and then they got wiped out, as we saw back in July. Yeah. So they were shorting, thinking that we're going to crash, but we didn't, because the whole time, the strong hands, the miners, they were all accumulating. So, and like the reason why I keep saying it's not a bear market is because the long-term holders and the miners, they control the majority of the supply, and they're accumulating. So if they're selling, yeah, it's going to kill the price, but they're not. They're net accumulating.
Yeah. And what do you think about the macro environment in general? Because we saw a lot of things happening recently, especially in the past couple of weeks. There's sort of this looming regulatory presence in the market, which it kind of feels like this is one of the things that's preventing Bitcoin from going forward right now. And we can see the impact that it had on the market, especially with what's going on in China, in the US as well. But like just today or last evening, depending on where people are, like we saw some positive news coming in. Like Powell said that they don't intend on banning Bitcoin at all, and we immediately saw the market reacting. So what do you think? How is the macro environment playing into Bitcoin's market, and how do you think it's going to play out in the midterm future?
Near term, I think the macro kind of conditions are a bit cautious. But when you look on a much larger zoomed out scale, it's still very bullish for risk assets. Why? It's because rates are still at zero. The Fed is buying $120 billion in bonds every month. There's trillions of dollars just floating around the world looking for store of value, right? So that money is most likely going to flow into equities, to real estate, and Bitcoin. So with all the taper kind of fears, I mean, the Fed said that even if they finish tapering, they're going to keep rates at zero because they keep redefining inflation in all these economic terms. Because I think they know they can't really raise rates because it's going to have a massive impact on the market. So at this point, really, the Fed is just supporting the market in every way they can. And you've seen that. The last time they raised rates, they had to walk it back because the market tanked 20% and ended up cutting rates and going back and then to QE. And then COVID happened, and now we have QE infinity. So back then we were, there was headlines about billions being printed. Now we're casually talking about trillions of dollars. So that is macro bullish for Bitcoin because that's what it was made for, right? It's to hedge against this debasing of currency and the inflation of assets, especially like in real estate and stocks. So, there might be a lot of uncertainty near term, but I think things will work its way out, meaning that these uncertainties will get, eventually investors will put it behind them. And when they look forward and they see all these tailwinds, I think the market will go back into risk on. So right now, stocks are down, there's a correction, there's a lot of technical selling pressure. But when you look at the big picture of the macro tailwinds, like I just mentioned, I mean, these are things that have driven the market for the past 10, 12 years. And also one thing to mention is that when there's like these cyclical peaks in equities, right? They happen when the majority sentiment is bullish. All the funds are fully deployed, right? And rates are actually rising. That's typically when it happens, but none of that's happening. Like at all-time highs, the sentiment was so cautious and bearish in the stock market. So that there's no euphoric peak, right? And there's a lot of money sitting on the sidelines. So what happens is when you reach those euphoric levels in the market, the cautious people, the bears, they flip bullish. They put their money on the sidelines in the market, and that just causes a huge, price move upwards. So I think that's going to come later this year. Obviously, the stock market will eventually burst. We don't know when, because this can go on for years. Because there's a huge dislocation between fundamentals and price, for stocks. But I think for Bitcoin, it's so undervalued given what we have going on in macro. So I think 40K, 50K, 30K, it's just a rounding error. Like people are being too picky about it. Just accumulate over time, buy the dips, and that's worked very well for long-term holders.
Okay, and given everything you just said about macro and micro as well, what do you think we can expect from Bitcoin in terms of price going forward? What would your best prediction be? Let's say we break it up into a short-term, a near-term price prediction, as well as what we can expect next year or the year after that.
So near term, it's almost impossible to predict what's going to happen because there could be some, black swan event or some unexpected news. So that will probably dictate the price. But looking at the midterm to long term, I really think that we're going to see like the last part of the bull cycle. I would say earliest probably December this year. I think it's going to spill over into next year because there's a lot of catalysts that are on the horizon, such as potential Bitcoin ETF approval. There's a lot of data on chain that suggests a lot of institutions and large buyers were accumulating Bitcoin between 30 and 40K back in June, July. It's very clear when you look at the supply held by wallets with over 1,000 Bitcoin, and just like the large accumulation of long-term holders. So that says a lot, and so we can probably expect some big announcements by public companies that that made those purchases in the fall. So that plus the ETF plus the supply shock that's happening, and the multiple ways of capital coming into the Bitcoin market, and the kind of the risk on trade coming back from equities, I think it's a huge tailwind. And people say, oh, I'm so worried about rates going up, like 10-year treasury yield. But the thing is, bonds are like the worst investment you can make because your real return is still below inflation. So there's no point. So and there's trillions of dollars around the world worth in assets that have yet to flow into Bitcoin. So I mean, when you look at everything like adoption rate and just people are aware of Bitcoin now, but a lot of them don't have yet to own it. So when you look at where we are on the adoption curve, I mean, there's so much upside. So, I think we're early, and it just makes sense to accumulate whatever you can, buy the dips.
Right. Okay. So let me take you back a little bit. You spoke a lot about Bitcoin being an inflation hedge, but we're also seeing, because there is this growing argument whether or not Bitcoin can be actually used as a means of payment, or if its actual purpose right now is to store value. So my question would be, is there anything that would make you stop believing in Bitcoin? Is there any event that can happen that will shift your narrative entirely? And if it is, what it is?
Yeah, that's a great question. So obviously with investments, right, you don't want to fall in love with it and become blinded. So I like to take the more data-driven approach, and that also kind of yields lower emotion. So for me, the only thing that would really change my fundamental view on Bitcoin is if something better comes out. Because if it does come out, then people are going to adopt it, right? And if it's truly better in terms of it can replicate the same, characteristics of money, scarcity, divisibility, right? The program monetary policy, the fixed supply, all those things. If it can replicate it and also somehow find a better network effect or make a better network effect, then okay, I will reconsider my thesis. I'll probably sell my Bitcoin and I'll move over to that asset. But I can tell you, I'm very confident that I don't think we're going to see that for a while, because it's just, I mean, Bitcoin has made so much progress over the years. I cannot believe it survived all the FUD, for the past 8-10 years that's come on, the hacks of it, of Mt. Gox, right, and the China FUD every single year. It's like routine at this point. The fact is, you can't stop Bitcoin. You can stop the trading. You can ban mining here and there, but it's only going to just move the innovation to another country that will take advantage of it. So I think there's always a risk of invalidating the thesis. I know what my invalidation point is. So if it happens, okay, I'm out. And I see that from a fundamental, a technical, and on-chain basis, but we're nowhere close to it. So I'm holding strong.
Yeah, that's a very interesting point, because one of the things that a lot of people I talk to who are not so far into the industry, and when they told me, well, okay, what if something better comes on, or what if they ban Bitcoin, or what if that, or what if that? Well, that's the thing. Actually, all of these things have actually happened. Like, China is the second biggest economy in the whole world. It has banned Bitcoin 150,000 times this year alone. There are like 50, like we wrote a report a few days ago, which said that there are over, how many different coins was it coming up every day? Over 10 coins coming up every single day. That's not like per week, that's every day we get 10 new coins. So obviously everyone is trying to create the next big thing. There are a lot of very successful projects, obviously, which are very different than Bitcoin, but everyone has, not everyone, but a lot of people have tried to create a better Bitcoin. But that's the thing, like, Bitcoin has stood the test of time, which is one of its, like, the core values of Bitcoin is that it has already been stress tested in any possible and imaginable way. And despite all of these attacks from hackers, from non-believers, from governments, and from whatever else you can think of, Bitcoin is still here, and it's trading at $40,000, $45,000 3 months after having hit like 65K. It's just crazy. And that happens amid a global pandemic, which is even crazier. So yeah, I mean, I think that's something that everyone should consider whenever they're evaluating Bitcoin as an investment thesis and whatnot. Okay, next question for you would be, it's completely different, but I think that given that a lot of people are kind of new to trading and investing in Bitcoin, and they're coming on crypto Twitter, looking at everyone who's giving a lot of different charts, and they're using a lot of different patterns. Tell me, how do you evaluate who to listen to? Because one of the important things of being good at what you do is getting your information from the right sources. How do you evaluate who you listen to and who you read on Twitter and on other social media and on the internet in general?
Yeah, there's a lot on Twitter, like a lot of information and people you can follow. So I try to keep it diverse, right? So I'll look at what the bears are saying, I'll look at what the bulls are saying. But most of all, what I look for is I want to make sure that whatever they're saying is data driven and that it's verifiable, right? So it could be on-chain analysis, or looking at historical type of context, like maybe in macro comparisons. I know the bears, they love to draw these fractals from previous bear markets, which I think is okay, but the main issue with that is they don't look at the on-chain conditions during those timeframes. So during those bull traps that they draw, that's when all the miners and the long-term holders were dumping during those bull traps. So that's what validates those bearish setups. But right now the charts may look like those kind of bull traps or those bearish type of charts. But the thing is, when you look on chain, it's the complete opposite. The miners and the long-term holders, they're not selling. So this is not a bear market. This is just liquidation wipeouts, FUD, retail panic selling, which we're all seeing it every day. But most importantly, that the trend is clear. So that's what I try to look for. And ideally, people that have kind of like a diverse skill set, looking at multiple forms of analysis, but also people that are very specialized, because I learned so much on Twitter. I mean, I've only joined 3 months ago, but I just try to follow as many people as I can that have that type of approach, because there's a lot of talented people out there, and you just got to find what really connects to you, but keep it diverse. Yeah.
And what do you expect from Bitcoin in this particular cycle?
Yeah, so I did cover a piece about my targets, maybe a month ago. So I'm still sticking to it. So my base case is $96,000 by December this year, or maybe sometime in Q1 next year. My bull case is looking at $178,000 to $190,000 by December, or some point Q1, Q2 next year. And if things go crazy, we could see 300,000 plus. But we got to keep in mind that these are all time and condition based. So I have a lot of technical targets that are mapped out to the upside. So what I'm doing is, when those targets get hit, I'm going to look at my on-chain dashboard, because I'm building kind of like a model that can value, that kind of just fires these signals on valuation or just general sell signals. So when these targets are hit, and I'm seeing a lot of on-chain sell signals happening, then that will increase the probability of a top. So I don't know where it's going to top out. I have these targets set up, and ideal ones for my main call, but it really depends on the conditions at the time. So what I hope for is that if we hit 100K right this year, and we're not seeing any major sell signals on the valuation side or any aggressive distribution, there will be distribution, but if it's like very minor, we have plenty more upside. And remember, we're deep in a supply shock, so it will keep going until an entity is incentivized to start selling more. So, but I firmly believe we'll be in the 6 figures, whether it's later this year or next year.
Okay. And for someone who's just coming into Bitcoin and wants to start investing / trading, they're not really they have nothing in common, but what would your best advice be to someone who's new to the field and wants to start putting some money inside?
Yeah, if you're new to investing, don't trade. You'll probably lose your money. Most people that do trading, I think it's like 90% plus, they lose their money. So it's, in my opinion, it's stressful, it's time consuming. You actually put your money more at risk, because when you exit a position, you have no exposure, so you're forced to buy back. What I recommend is long-term dollar cost averaging into an asset that you understand and that you're going to pay close attention to. So don't buy like 20 stocks or like 25 coins. Chances are you can't keep up with it. Focus on the assets that you think will do very well, and keep an appropriate position size, right? Don't leverage yourself, because I mean, it's crypto. You don't need leverage in this. It already moves so quickly, right? And just have focus. And that's the mistake I did over the years. I had too many investments all over the place. I couldn't keep track of it. When things moved, I just couldn't sell in time, or I couldn't react fast enough. Now my portfolio is concentrated into high conviction bets. So I've been a Tesla investor for 8 years. I've been in Bitcoin for over 4 years now, Apple for 10 years. That's conviction, because I understand how these companies or assets work, and I stuck to it, and I accumulated during these down cycles. So that really paid off. So that's what I would say to people that are starting out. You gotta be patient.
Patience, that's something that a lot of people are lacking, I guess. But for those of you who are not aware, a dollar cost average model is where you invest a certain amount of money over a certain period of time. So for example, you say that you want to invest $1,000 in Bitcoin. Instead of putting it all at once, you just go ahead and split it into different portions and say you invest every Monday or every day, or regardless, but you just make your own targets. And the shorter your investment period is, the more average your price will be. And if you invest every day, you will have a better average price. But if you invest every month, your average price will be different. It will be like there is a higher variation as opposed to the current price. So this is something that I also agree that this is perhaps the best way to invest in whatever you're investing. It cuts your downside substantially because you're always kind of close to where the price is, and you have enough exposure to gain. But yeah, well, Daniel, that's been a blast. I think it pretty much sums up everything I wanted to ask you. Can you tell our audience where they can find you on social media?
Yep, you can find me on Twitter at DanielJoe916. I post my market updates. This is my articles. Just stay tuned. I post quite a lot, so that's where you can see kind of my thoughts in real time. And I'm really excited because I think we're entering the kind of the more volatile periods of the cycle, and I think that'll be to the upside. So stay tuned.
Yeah. Okay, man. Thank you very much for this, and you have a great one.
You too, man. Thank you. Appreciate it.